No, we're not going to my view just yet. You're a little bit early. For a broader view of themes driving markets and investing, I'm now joined by Jack Lowenstein, who's the Co-Chief Investment Officer at Morphic Asset Management, and he's in our CBD studio. Jack, good to see you.
Good to see you, Helen.
Now, I want to talk about this sort of key man risk in funds management. We've seen Dick Fish leave from Bennelong. Of course, we saw Peter Hall at the beginning of the year leave from Hunter Hall. It again, the Bennelong story really raises again this whole issue of kind of star portfolio managers, the risk if they either leave or get sick or something happens.
Yes, look, I think it is a genuine risk. I'm very happy to say it's one that, in our business, we had a very close look at when we launched the business, which is why, for example, you talk to my colleagues, Chad, Jeff and James very often. We've got genuinely a team, and Chad and I are formerly co-chief investment officers. The trouble is that the intermediaries don't like that. They want the heroes. And for example, we got marked down by one of the rating agencies for having diluted authority because Chad and I have the right to veto each other. We think that's just good risk management from the point of view of our own investors.
Yeah, exactly. Surely, I mean, it sort of decreases the risk, surely, that both of you will be wrong on an investment if you have two heads.
Well, we like to think that, especially you've got the key thing though is culture. And I forget Morphic, although we don't ever forget Morphic. But look at Perpetual. Perpetual's had a succession of very, very gifted senior leadership.
Oh yeah.
And they come and they go, and they come and they go, and Perpetual is literally perpetual. And so I feel it's important that some of these agencies actually focus on culture and on companies that have an inbuilt succession plan, like Perpetual, and to some extent ourselves.
All right, but you are essentially blaming ratings agencies and that people, and maybe even investors too, want a kind of a star to attach their trust and their money to. But this is a risk management issue for you fund managers as well, particularly in the smaller funds.
It is, and that's why I think it's very important not to ask, who the leader is, but ask who the team around him is. Now, I'm the leader by virtue of my age, but certainly not by my intellect. I mean, you've met my colleagues, you know how smart they are, and so I think that let's focus on culture. Let's focus on teams, not on individuals. That's the safer bet for investors. And certainly, I've just come back from 3 weeks marketing around the country for our LIC, our listed investment company. I have made that point again and again and again. And the really smart guys are asked to come and meet the whole team in Sydney.
Yeah, OK. So, again, it's that idea that the culture from the top needs to be broader, even if the funds are small funds. So, Jack, let's move on to, where and how are you, as an active manager, finding value but getting substantial returns, given there seems to still be outflows of money to ETFs and index funds?
Well, we've had a pretty good calendar year so far, and a lot of that...
Yes, sorry, I didn't mean that you're suffering outflows, but obviously that is happening to some of the funds.
Look, I was going to say that I think the thing is that active managers, I think, are having a better year this year than they have in the past. Most of our competitors are having a reasonable year as well. And I think the reason is actually looking more like a stock pickers market. We, for example, had a very good year so far in India. In particular, we had an exceptional year in India. And people who are willing to step away from just a more index-style allocation are doing well, and so I think that the key now is to be braver, not just try to hug the index.
Yeah. Now, Jack, we do see some very big geopolitical risks at the moment. We tend to look at the big ones like Syria and Russia, and then Trump and North Korea. How much of a risk to Australia, say, is what's happening in Indonesia even?
Well, Indonesia is very interesting. I mean, I think it's probably, in some ways, a more interesting one. As some of your viewers may know, there's a battle going on for the Jakarta governorship between the current incumbent, Ahok, who is a Chinese and a Christian, against some pretty aggressive, what I might call Muslim nationalistic people. And Ahok, I think, is probably playing the better card at the moment because he's playing to the Indonesian I think it's called Pancasila, which is the sort of the idea that Indonesians must be united in their diversity.
Yeah.
And winning that. But I think we should be watching out for that one. It would be a bad sign if a Hock lost and then he got humiliated by the courts who are accusing him of blasphemy, which is currently in suspense.
Yeah.
So it's a very tough one, and I think that's an important one for Australia, probably more important than what goes on in North Korea, which will probably in the end be nothing.
And of course, you know, what's going on in Aceh as well, part of Indonesia, clearly. You know, there's a lot of fundamentalism happening there. I mean, that could end up being a risk for Australia, couldn't it?
It could. I'm pretty relaxed about it, but I think it would be a wonderful sign for Indonesia if Ahok, who's apparently a very good governor, wins this battle to get re-elected. And I think it'll take a lot of pressure off the president in Indonesia, who was formerly the governor and who really anointed Ahok as his successor.
Yeah. All right, Jack, complete change of pace. How are you seeing this potential battle for BHP? I mean, they obviously have to take the Elliott management proposal seriously. But in the end, Elliott is a 4% shareholder. That's not a huge, it's not insubstantial, but it's not a huge shareholder. Where do you think this is heading?
Well, it's only 4% in the UK stock only. So,
yeah, that's right.
Yeah. Look, my view is that the smart move for BHP is to protest all the way and do a few of the things he wants them to do.
Sorry, do a few of them or do nothing?
A few of them. I think buying back the shares in the UK, which are trading at a discount to the Australian shares, is an obvious move to add value for the cycle. And I think they'll continue to do that come what may. I think that the Elliott Partners are a very impressive operation. We are currently a kind of co-investor of theirs in the move to try and shake up Samsung in Korea. So we have a position in that stock, and we think that what Elliott Partners is proposing there is very sensible. And he's had a consistently good record in these shake-ups, but I think he might struggle with BHP. It's got too many people who like it, and the idea of moving its chief listing out of Australia, I think it's a non-starter. That's never going to happen.
Yeah. All right, Jack Lowenstein, Co-Chief Investment Officer at Morphic Asset Management. Thanks so much for joining us. Great to hear your views, Jack.
Good to be here, Helen.